Elon Musk just dropped bombshell news for Tesla stock investors. Mars Catalog wrote on X, if it was far off, Elon probably would have commented on it. If they say nothing, it's probably not far off. This is in regards to the take rate for full self-driving of the individuals that opted for the free trial of full self-driving last month. Elon Musk, he responded and said, I don't comment on everything, as sometimes I don't see it, and commenting on everything makes it easy to fish for information. The take rate is much higher than 2%. Please, let's be honest, we all know what Elon really wanted to say there.
Bitch, please.
Mars Catalog responded to Elon and says, that's what I thought, Elon, but I wanted to bait you into commenting on it. Thank you for providing that color. Everyone was treating it as a fact. So Elon confirms the take rate was much higher than 2%. This is something that Wall Street is not picking up on, as Tesla stock is down about 1.5% at the time of recording this video. But when we talk about FSD and take rates and subscription rates and all of that shebang, that is very important for Tesla, because Tesla already, again, recognizes the upfront cost of putting the FSD chip in the car, putting the extra cameras in the car. All of the software and hardware aspects to full self-driving are already in the car. When you actually get the subscription for full self-driving, you just download a software update. It's 90+% net margins to the bottom line, accretive to shareholders. So the take rate being 2% on 2 million vehicles is 40,000 new subscriptions. Times this by 99, times this by 12, and you're looking at about $47.5 million of additional revenue for a full year for Tesla, which this only adds about 2 cents to Tesla's EPS for a full year. Now, for context, if the 2 million roughly Teslas that got the free subscription, trial at least to full self-driving, if there was a take rate of, let's say, 15%, some people believe it's higher than that, let's just call it 15%. That's 300,000 new subscriptions that signed up, times this by $99 a month, times this by 12 months a year, and that is an additional $356 million of, let's just call it bottom line net profits to shareholders. Divide this by 3.3 billion shares outstanding, and boom, that's 11 cents to the bottom line for a full year. That's almost 10 times more impactful for Tesla's business than a 2% take rate. So we also have some pretty interesting posts as well from, again, Mars Catalog and Elon responding to them. Mars Catalog says AI is taking off at an insane pace. Elon responds and says, yeah, seeing it everywhere. By the way, 12.4 goes to internal release this weekend and limited external beta next week. Roughly 5x to 10x improvement in miles per intervention versus 12.3. So Elon's basically saying you're going to reduce the amount of interventions by 5x or 10x based on the mileage that you are driving. So perhaps if you drive 1,000 miles on FSD and previously you had 10 interventions, now you might only have 1 or 2. So that's a big deal. Elon Musk says 12.5 will be out in late June. We'll also see a major improvement in MPI and is single stack. No more implicit stack on highways. Elon Musk also confirms that the Cybertruck will be getting FSD around June with a 12.5 update. Tesla has begun construction of its Shanghai Megapack factory, its second megafactory in the world. This one factory is expected to produce upwards of $15 to $20 billion per year in revenue, about 10,000 megapacks per year. And you can see they are busy at work clearing the ground here, which, considering we just heard about these new plots of land that Tesla bought and this mega factory just a couple of days ago, and they're already starting construction, Things just get done quickly in China. We are expecting this factory will be up and operational in 2025. President Joe Biden is raising tariffs on Chinese-made vehicles imported to the US from 25% to 100%. We reported on this yesterday. Tesla's not affected by this because Tesla does not import Chinese-made Teslas to the US. But Polestar does. The Polestar 2 EV is built in China and imported to the US. It will be interesting to see how Geely, who owns Volvo and Polestar, responds to this new 100% EV tariff. There are other companies that this will affect as well that you know of, but Polestar was an interesting one. Sawyer Merritt writes, back in 2019, Tesla completed phase 1 of Giga Shanghai construction in 11 months. Tesla completed its first Megapack factory in Lathrop, California in about 14 months. This new mega factory in Shanghai will probably finish in record time. Nobody can match Chinese construction speed. There are increasing calls to Elon Musk to offer the 1% APY financing rate in Canada for the Model Y as well. Verizon is electrifying its Rhode Island fleet of service vehicles. Presumably, some of those are going to be Teslas. By offering a special loan rate of 0.99% APR available for those with excellent credit, rather than the usual 6.49% rate, Tesla Model Y long-range buyers in the US will save $8,202 over the 72-month loan term solely due to the lower interest rate. That's $114 a month in savings. Xiaomi to add a second shift in June, boosting the SU7 plant capacity to 20,000 EV units monthly. Tesla board chair Robin Denholm and others at the company reportedly plan to spend the next several weeks crisscrossing the globe to rally support from shareholders to support the vote next month. GM has started production of the Chevy Silverado EV RST First Edition. If this range is correct, that's kind of insane. 440 miles, price tag of $95,000, 100 miles of range in 10 minutes, and 0 to 60 in 4.5 seconds. Here are some images of this. Let me know what you think down below in the comment section, especially if you are pickup truck drivers. I personally like the square body look on trucks, and this is not that. This is more like a Toyota Tundra kind of feeling. But let me know what you think down below in the comment section. Kind of looks like an avalanche with this part here, which I'm not a huge fan of. But again, let me know what you think down below in the comment section. Take a look at this. As per Bloomberg, institutional investors hold roughly 46% of all Tesla shares, down from about 70% when the first vote was held back in 2018 for Elon's compensation package. Retail shareholders own about 30% of Tesla shares today, excluding company executives. But the big story today, as far as the broader markets and what's really affecting things, is the CPI. Okay, so core CPI month over month came in at 0.3%. That was the expectation. Core year over year came in at 3.6%. That was actually a little bit better than the expected, 3.7%. So a little bit of good news there. Headline inflation month over month came in at 0.3%. It was expected to be around 0.4%. So that was a little bit better as well. Inflation on the headline year over year came in at 3.4%. The expectation was around 3.4%. So a little bit of good news. Inflation mainly came in line with estimates, with some areas doing a little bit better. The Nasdaq is breaking out to a new all-time high today, and 10-year treasury yields are down almost 9 basis points. So this was definitely seen as good news today, but you are seeing GameStop, AMC, other meme stocks, if you will, that are selling off. So a lot of your small cap runners that have been running in the last couple of days are really not doing well. A big leader on the day today is semiconductors. SMCI is up 10%. That is having an outsized impact on specifically the Russell 2000. Nvidia is up 3.5%. AMD is up 2.5%. Broadcom is up 2.5% as well. So semiconductors are definitely a leading sector today that is making things look a little bit better than they actually are. If you take a look at the percent of stocks above their 50-day moving average, only about 1.39% of stocks are breaking above their 50-day moving average today. That's good. That's a positive number, but it's still not, that strong. Not like a 1+% day across all of your major indexes strong. So there's definitely some stocks that are leading the way that are just outperforming, that are causing the index to outperform. Tesla's stock today is down about 1.5%. And specifically, a lot of your heavily shorted stocks that have been running in recent days, most notably, are down today. This 1.4% down move for Tesla has nothing to do with Tesla itself or no specific news related to Tesla. If anything, like we went over, there was actually great news today that Wall Street may not be picking up on. Nick Timiraos, in his latest article with the Wall Street Journal, says April CPI takeaways for the Fed. One good print can't offset 3 unfavorable ones. It may take a couple more for officials to get over the PTSD of the Q1 inflation. It reduces the risk of any shift to a neutral bias. Example, open the door to hikes. It is good news, though, that core inflation in the April CPI was 0.29%, basically in line with economist expectations for the first time this year. A 12-month change, this is the annualized 12-month change of 3.6%, a 3-year low. 6-month annualized rate of 4.1%, the highest since July. That's not great. A 3-month annualized rate is at 4.1%, down from 4.5% in March. So that is good news. And if we take a look at what big banks were expecting for CPI came in lower than UBS's expectation of 0.31%, Nomura's of 0.33%, JP Morgan's of 0.33%, came in line with Deutsche Bank and Morgan Stanley's expectations. It came in lower than Citigroup's expectations and Barclays' expectations. What I do think is a little alarming for the economy, though, is retail sales month over month. Retail sales were expected at 0.4%. They came in at 0%. Now, last month, you were revised from 0.7% down to 0.6%. So you were probably actually negative for retail sales in the month of April. The consumer is definitely starting to slow down. And I think that's another factor of, 10-year treasury yields falling and stocks rising today, because this is just enough weakness where it doesn't look like you're crashing into a recession, at least not yet. I think it's going to take some time for that data to actually materialize, and that's probably what it's going to look like in 3 months' time, let's say. But right now, it looks like economy's weakening. It looks like inflation's moderating, and that's good news for stocks. Here today in Tesla's stock, option activity is pretty dang low from big money. You have 84 different trades totaling $9.3 million with a positive order value of 52%. Volume today, expiring by this Friday, is 67.58% calls and 32.42% puts. So there is a lot of people making trades today, betting that Tesla stock can rally into the end of this week. Tesla's cost to borrow fee is about 1% today, so actually not a lot of shorting activity, even though Tesla stock is down over 1%. You do have a multi-year high for short interest at 3.86%, $19.2 billion currently in short positions, 107.12 million shares that are currently sold short. And overall, I still think short sellers are in a very bad position if this narrative continues of slowing inflation and also slightly slowing economy. Remember, an economy slowing too much heading into a recession is going to be bad, but just enough weakness to get inflation to come down and stocks are going to like that, and that's exactly what's happening today. Inevitably, this will turn into a positive for Tesla, but again, just to be clear, why Tesla's stock is down today is because it's a heavily shorted stock. It's been trading alongside AMC and GME, not as a percentage basis, but it's had some really strong last 2 days alongside AMC and GME and other heavily shorted stocks like Rivian and Lucid and Beyond Meat and all kinds of different other names. They're all down today, all of them. So that's what's going on. Global inventory numbers are actually falling for the Model Y down to about 7,000. So that is a reduction of about 300 over the past couple of days. The Model 3 inventories continue to rise to about 2,750. Model X as well to about 2,600. The Model S inventory numbers are at about 1,400, which is a little bit of a climb here. I think inventory numbers are overall pretty healthy for Tesla. Besides the Model Y has been high, and this reduction of the interest rate, the buy down here in the US in May, probably will help lower Model Y inventory numbers even further. So that's something I am watching for. Tesla continues to run about 4,000 different ads today with Google. Google Trends data for full self-driving is sitting at about 34, which you did hit a low of 26. Now, this is coming off of a high, an all-time high by far, of over 100, right? Or right at 100. I guess you technically can't go over 100 on Google Trends, but if you could, I'm sure it would have been over 100. Now, what I just want to see is, where do you trend at? So I think it's too early to see a trend, but you did bounce from 26 on the low side to 34 now. If you do trend in this range, in between, let's call it 20 and 30 or so, or 50, that's going to be a great sign. The take rate is indeed higher. And judging off of the news that we got from Elon today, the take rate is much higher than 2%. Trends data for the entire Tesla lineup continues to come in strong today. The Cybertruck recently going from 63 to 69, which is still hitting the highest level you have seen since the actual day the Cybertruck was launched. And I think this big spike was a lot of investors, right? A lot of you and me searching about the Cybertruck. This ramp up that we've seen is organic search trend activity. I would argue this is not investors that are constantly searching about the Cybertruck, right? You've went from 16, 17, 16, 19, following after the launch of the Cybertruck back in late January, up to 69 today. It's been pretty continuous as far as search trend activity overall. And I think this is the start of the halo effect. I think you would need to see this to get a halo effect for the rest of the Tesla brand. Now, recently, the Model Y has been the one that is really starting to spike from 28 to 47. That's because of this special interest rate, and that is, well, something I think all of us expected. A pretty good sign that you are continuing to see some likely really good orders for Tesla. And I think this is a strategy of buying down the interest rate that Tesla is going to continue to use. It wouldn't surprise me if they use this on the Model 3 as well here over the next coming months. And now the Model 3's search trend activity is staying the same at 23. Same is true for the Model S as well as the Model X. Over on StockTwits, sentiment for Tesla is bullish today at 59. Yesterday, you were neutral at 51, so that is good to see. Message volume today is increasing as well from 47 yesterday to 48 today, which is also considered normal. Participation ratios down a little bit today from 56 yesterday down to 54 today. We do have some earnings coming out tomorrow morning with Walmart, Baidu, JD, John Deere, Nice, Lightspeed, Under Armour, ADS, Canada Goose, and Global Ship Leasing Company. Walmart is the huge one, okay? I think Walmart is the most important earnings if you want to judge how the economy is doing. Now, based on retail sales today that came in flat on a month-over-month basis, really missing expectations by a large margin, I think Walmart's going to have some not so great things to say about the consumer. If you've been to a Walmart recently, they're a lot slower than maybe what you remember back, over the last couple of years. So there's definitely consumers out there that are slowing down, including myself. Let's be honest. I have slowed down on discretionary purchases, as per most of you guys as well. And that will start to hit the economy. And Walmart can be that leading indicator to tell you that something is wrong. Now, maybe I'm being a little bit too cautious. Maybe Walmart comes out and says, hey, people are not spending as much as they were before, but they're still spending a lot. Maybe that's what we get. Maybe it's just fine. But depending on what Walmart says, you want to be paying very close attention to literally every single word that comes out their mouths. But more on that in the next video. Here today, Tesla stock did get rejected off of this trend line, as I thought it would. Okay, I thought Tesla would get rejected at this trend line. That's around 180, 181. Now, you've fallen quite a bit from the high of the day today, which was about 180.18. No, exactly 180 down to the penny. You got rejected. You fell all the way to a low of $173.17. Now you're back to 175.34. You're above your 20-day moving average as well as your 50-day moving average. That's great. Your 20-day moving average is actually about to cross above your 50-day moving average, so that's typically a good sign as well. That doesn't tend to happen all too often, but when the 20-day moving average breaks above the 50-day moving average, that means the last 20 days have started to be a lot more bullish, a lot better than the prior 50 days. So that's a very strong sign. And I do believe, well, that could create more upside for Tesla. And overall, today's CPI report and retail sales should create a pretty good environment for Tesla stock to do well. Again, I think some of the meme stock hangover today is having a negative impact to Tesla stock today. But I am expecting Tesla will hold up support at the 50-day moving average if indeed you do get a continued kind of weakening in Tesla. I'm not expecting any kind of big fall here. Now, Walmart could actually be a canary in the coal mine, could actually be one of those stocks that nobody pays attention to until they do. Walmart's usually not the company that moves the broader markets, but depending on what they say, they could move markets coming tomorrow morning. Now, if things are all good and maybe I'm a little too cautious, then I believe Tesla stock will inevitably make its way back into the 190s, well above $200 per share. And there is a lot of option activity targeting the high 200s by mid-June, which is a little over a month from now. If you take a look at the RSI today, RSI is sitting at about 52 for Tesla, so pretty neutral. The MACD line is 1.41. The signal line is 1.19. So the yellow line, MACD line, is still above the blue line. That is good. You're actually still slowly trending upwards, but you've definitely seen the momentum kind of go sideways here in the past couple of weeks. Here today, TLT is up 1.46%. So that is great. Our trade is doing fantastic today. USO is up marginally today. It's actually up quite a bit from the lows, though. When you hit about $74 a barrel, you're currently at $75.27 per barrel. So, a little bit higher of a move there. If we take a look at the dollar today, the dollar is down about 0.6%, and that is also having a positive impact on our markets. When the dollar falls, that's good news for stocks. When the dollar rises, like you've seen in 2022, that tends to be a pretty bad time for stocks. Let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.